Wall Street Week Daily segment with the host of Wall Street Week, David Westin, who joins us every day. And David, of course, all the talk has really been about the job market, a job market that's on fire.
Yeah, how about those numbers, huh? And so we had the good fortune of having Larry Summers on to ask him about those jobs numbers. And what he took from them, of course, it's good news. He has some concerns. This is part of what he had to say.
We've got something of an Energizer bunny economy. The economy keeps moving right along. It's not only that we got a very strong employment number this month, we had upwards revisions for the last 2 months. If anything, it looks like job growth is accelerating. For the moment, this is great news. We got an economy that looks very strong, and the wage inflation numbers looked very much under control. For the medium term, very complex picture that the Fed has to read. Tight and substantially tightening labor markets, combined with significant labor unrest, combined with significant uncertainty about commodity prices. And even though it doesn't show up in the inflation statistics explicitly, people feel when interest rates are going up, when mortgage rates are approaching 8%, like their cost of living is rising.
Why is the plane at this point flying this fast? I mean, an awful lot of people thought once you raise the rates as much as the Fed did, as quickly as it did, it would slow things down. Sure doesn't look like that message is getting through, for example, to corporate leadership that's hiring as fast as they can.
Economists will be studying that for a long time. One of the things I've talked about on your show is that interest rates may be less restrictive than they used to be. When people don't sell houses because they're locked in with low mortgages, house prices go up, and that makes people feel wealthier. When the government's got as much debt as it does and interest rates go up, that's more money in people's pockets, and they spend some of it. When capital that people are purchasing is a new AI system rather than building a new factory, it's all shorter duration and less interest sensitive. So we may be living in a world where the interest rate is less of a tool for guiding the economy than it used to be. And that means when things need to be cooled off, interest rates are going to have to be more volatile.
Larry, let's talk globally for a moment here. I know the IMF World Bank meetings you'll be having in Marrakesh next week. You'll be there making a presentation, coming off of a speech you gave in India, actually, as the head of the Center for Global Development. Give us your thoughts about what needs to be done at these meetings.
We got to have some serious discussions about the accumulating, unsustainable path of fiscal policy in much of the industrialized world. I'm not somebody who always has those concerns. I was much less concerned than most other people were after the financial crisis because I felt with very low interest rates, we didn't need austerity. We needed a push to lift the economy along. But with the kind of spikes in interest rates that we're seeing, the kind of needs that lie ahead, I hope that the ministers can push each other on recognizing the gravity of the fiscal situation. That's a big issue for us in the United States. That's a big issue in Europe. That's an issue in many other places. And I also think that with these spiking interest rates, we got to make sure that we're thinking about contingency plannings for our financial risk. Between China, the US bond market, the quite elevated level of many markets in real estate, in stocks, in private equity, I see more dry tinder for financial flames than I've seen in quite a long time. And so I hope contingency for financial crisis, medium-term fiscal in the industrialized world, and getting resources to the global south. That's what I'm going to be looking for in Marrakesh